All right, welcome back for another episode of Carnivore Trade. Today is Tuesday, December 12th, 2023. If not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading news. Let's get into it today. So markets here today, another rally, and this has got to be one of the most audacious rallies I think I've seen ever. Not the rally in general, not this whole rally, but just even today specifically, given the fact what we've done lately. The market is basically playing chicken with the Fed right now. So take a look here. First thing this morning, I said in the trading room, I said, wow, there's a whole bunch of 0DTE gamma at 46.50. They might want to take it there. And I said, I mean, that would be insane if they did that in front of the Fed. But here they are. They're doing it right now. We're only 10 points away. Now, we're probably not going to get there today. We did pull back off the highs a little bit. They'll push us off of that wall. It looks like 46.40 is now kind of the level here, but 46.50 was pinned all day long, or pegged all day long as a point of interest. And you take a look here, we made the low in the first 10 minutes, and they floated us all the way up there. So the market is basically daring the Fed. I can show you here the numbers from CPI. Not that it was a big event, it was kind of a non-event, but you can see here, if I can pull that up, the last several months, right? So 3%, then 2, 3.7, 3.7, 3.2, 3.1. The market, keep this in mind, the market has 5 to 6 cuts priced in, baked into the cake for next year. And inflation is sticking. So the sticky inflation narrative, as of right now, is still in play. Remember, we're almost 2 years removed from the first 75 basis point hike. So we're well into the lag effects, coming into play now, and inflation is still sticky. I think the market's a little offsides here, and I would be absolutely floored if Jerome Powell does not say something as hawkish as possible. That said, I'm not expecting a big pullback here, even if we do get one. We're going into end of the year. You don't want to fight these Christmas flows. A lot of end of year flows. I told you guys on the CPI day that this is exactly the type of move that will create FOMO into the end of the year. It'll create fund managers chasing to meet their benchmarks because they're behind. And this is kind of what we've seen here. So maybe we could retrace to 45.50. There's your all-time high trend line. It's certainly possible, but I do think I would be surprised if Powell doesn't try to do something hawkish tomorrow, because this market's literally playing chicken. I mean, usually, and I said this yesterday, I don't like how we're rallying up ahead of CPI, because a lot of the time when that happens, you're kind of baking in price, and it makes it harder for price it makes it harder for the volatility event to surprise to the positive side, right? We actually had a slight downside surprise today, month over month, and the market didn't even care. So the market's really just spitting in the Fed's face right now. So that's kind of my thoughts right now. That said, we did hit the pivot. So 46.37, if I can get there. There we go. 46.37 on the SPX. That did get tagged. And we are into that. Again, I think they'll probably hit 46.50 tomorrow. It's not that far away. But yeah, definitely very, very audacious rally. We'll see if, maybe the market doesn't care too. I think the last time Powell was tried to be hawkish, the market didn't really care. Again, end of year flows are powerful. I'm not trying to fight them unless the bears come in with a sell signal, and that would be a high volume sell-off, meaning over 100 million shares and, like a 1% down day. That would actually mark a possible interim top. On the other hand, if they maintain trend here and the volume remains light, keep in mind here, again, just like yesterday, volume very light. Don't fight that. 50 million shares we're basically at 4 o'clock now. If they keep this up, they can go to 470. So don't think that can't happen. I know that we're up a lot already, but things have a way of going higher. When everybody's looking for the pullback, usually you'll get the pullback when people stop looking for it. So in any case, markets are holding up here, and definitely one of the most arrogant and audacious rallies I've ever seen. Triple Qs here up another 0.75%. Again, we'll look at 400 on the QQQ. That's going to be the next level. Maybe a pierce of that. Again, there's your red bar high from Jan, 402.28. it's not that far away right now. It certainly could get there tomorrow if we get a sugar high off the FOMC. IWM still looks very strong. Inside day, again, it's down, it's flat, by 9 cents. But, pattern-wise, that's how you draw it up there. Moving average is catching up to price now. It's almost there. Again, this should get to 190, maybe even, up to this pivot around 190, 186. The Dow here via the diamond, again, above the 365 handle. We're just going to call this the double top. So I think before we have a correction, this is just my, so let's see, 369.50, there it is. Okay. So that's just my, if I had to make a prediction here, I think they're going to get the Dow to make a new all-time high before we have any sort of correction. Why? Because the average retail investor, not retail trader, not FinTwit, FOMO, Gamma Boy. I mean, the average investor, retail investor, doesn't know anything about the NASDAQ. They don't know anything about the S&P. They don't know what the Magnificent Seven is. They just know the Dow Jones Industrials. You get that to make a new all-time high. CNBC is going to take out their pom-poms, and they're going to be doing this all day long. That's what's going to coax in that last bit of money that you need to get that corrective move. That's just a educated guess that I'm making here. But right now, Dow up another 0.5%. It is parabolic. It is unsustainable. But again, don't fight the end of year flows until the bears make a move. When they make a move, then you can jump in. But right now, don't fight it. SMH here up another 1%, new all-time high. Look at Broadcom here. Avgo up another 4%. That is up, 175 points in 4 days on a $900 equity. So that is a monster move for Broadcom. Big company too, so big market cap. Take a look at AMD, another buy the dip in the morning and a big shot up for AMD. Intel is lower but had a nice rally the last couple of days. But you notice what's not really rallying? NVIDIA. I'm telling you, Broadcom and AMD, they're coming for NVIDIA's business. And I think it's more of a longer term thing here. It doesn't mean NVIDIA can't go higher, but they are not going to be able to enjoy those margins that they've been getting fat on this last year, really moving forward. So they're going to have some serious competition in next year and moving forward as well. Anyways, IGV here up 17 basis points. Again, that can still get, that could still pierce the 400 handle. I still think it needs to do weekly consolidation, but again, I'm not fighting it. So, by the way, Oracle reported earnings yesterday, pretty good dump, and IGV is still up despite that, so it shows you a lot of strength there. Adobe up 1.3 again. CrowdStrike, Cloudflare, ServiceNow, all green on the day, so kind of offsetting that big dump in ORCL. Dow Transport's also acting well today, although it did come in off the highs, up just 21 basis points here. But again, look, bullish in sidebar. Technically, I got a buy signal on this right now. Not just the inverse head and shoulders, but nice bullish inside bar, good consolidation, 20 MA catching up the price. So transports look good here. I wouldn't bet against them right now, but again, you have the FOMC tomorrow, so you might not want to step up in front of that. Interest rates here via the 2-year. I think rates look good right now, and maybe if they can finally rally, if Jay Powell can push them back up, maybe this market will come back to earth finally here. At least in the short run, but you see the 2-year there, green by a couple of basis points. Again, short term, 480, 482 is going to be a level, and then really the big level is at 5% would be your retrace, target potentially. 5-year would be 440, 10s, 4.4, maybe 4.6 if you really start to head up. Then the 30-year here, 4.42, and then 4.6 there on the upside. If they do head lower, and I showed you this yesterday, I'm going to use the TLT. This is where it would go. So right to that 200-day moving average, which coincides with that previous trend line. So I don't really see a ton of downside for yields here or upside for bonds. Maybe you could get a blow-off move, the market might just have a mind of its own tomorrow, despite what Powell says, and just say, hey, we're going to bid bonds up. And you could go into that area, but that's really all the upside here that I see for bonds and TLT right now. So I'd say you're closer to resistance than you are to support at this point. But that's it right now. So anyways, XHB here, just an inside day. It's had a huge run, and it's sitting at all-time highs. This is acting well. Nothing wrong when you pull back there. It is overbought. VNQ, also decent pattern there as well. That looks pretty strong. Again, letting the 20 moving average catch up to price. And if it does, it can go higher. Next level is around 86, 86 and a quarter. XLF here, another push higher. So again, continuing to see this squeeze. And again, we are into a supply zone, but when the volume is light, you can sometimes just float through it. So, be aware of that. It is a good supply zone. Now there's a ton of resistance at 37 if we were to get up there, right? So this is kind of where you broke down. You broke out here, you retested it, hit it, hit it, hit it. Then we finally broke through, and then we retraced right there. So there's going to be a lot of supply there. If we do get up in that range, it's not that far off now. But again, banks acting well. KRE is lower today, but that's had a nice move recently. Same thing with KBE. That can still get to 44. Broker dealers made a new intraday all-time high, and it looks like they might make a new all-time closing high as well. But again, that is hit target from the inverse head and shoulders. It's not a short, just an upside objective. Into energy here, so crude taking a dump here. Again, told you guys I don't like that. I would have preferred a straight pierce of 68 last week. We never got it, and that's why I've avoided it, because you got a down move 1, 2, 3 inside bar and another down move. It is getting a little attractive for you, and another bounce here. Kind of looking at this, starting to get a little 4-hour RSI divergence. That's one of the first things I look for in this type of scenario. A little bit of a daily divergence, not great though. I'd say minimum it needs to pierce 67, and I might be interested for a quick bounce. But I don't like the bear flag. I don't like it when you do that. So again, just a little educational thing here. Again, I told you guys a while ago I like 68, but I don't like 68 now because you bear flagged ahead of it. So you have more momentum now. You've just based for 3 days. So if I'm going to play 68, I want it to look like that. So I don't like it. I would say at least 67, maybe even 66 now. But we need to start seeing some extreme oversold kind of indicators going off there if I'm going to even get interested in it. But it is getting a little attractive. I'll definitely admit that. XLE here, slight lower low. Again, leave this alone. It has to go lower. XOP. Again, that level held for a few days. This is why you avoid it. Bear flag, it's no longer good. You want it to go down in a straight line. You don't want it to consolidate because now it's coiling up and building energy. So we are taking out that level a little bit. Doesn't mean it won't hold, but I don't really like it right now. I do like OIH if it can head lower, another 10, 12, 15 points. I think the OIH would be good. CCJ starting to curl back up, so we'll see if that gets up to $50. URNM curling back up as well. That can still get to 52 and change. Nat gas reversing all of yesterday's move. Look at the volume there. We talked about this yesterday. Historic volume. I mean, you got to go back. I think it's only been over 270 million, like a handful of times ever, and then right back down today. So with that tail candle right back below. So again, nat gas can't get out of its own way here, and that is sometimes how it goes in the winter months. Dollar index here, that's still holding up. So again, that 4-hour inverse is not really, wasn't invalidated. We had a little slice there, and then we came right back up. So that's still in play, but we're just going to remain neutral on it until proven otherwise. You could make a case this is daily bullish consolidation right now. We had a little up move, and it's trying to kind of firm up. If this does trigger and you get above this area, we talked about that 106 target, that's where it would go. But we'll have to see what happens tomorrow with the Fed, obviously. Gold here, flat. Leave it alone. It needs to go to 1950. Silver, I don't really like this 618 anymore. Doesn't mean it can't hold, but again, like I said yesterday, I don't like that you came down here and you just kind of like danced around the level. You bear flagged. Now you're building energy possibly to break that. So I'm just leaving silver alone right now until I see a lot more here. Platinum, decent day there. So I like this best out of the 4 metals right now. We'll see what kind of pattern that puts in, but platinum is holding up well. Palladium, a little bit of a bounce there. That can still go to 900. And then copper inside day. This is neutral right now until proven otherwise. But if we lose this pivot, it can get bearish pretty quickly. All right, Bitcoin here. So had a little bit of a dump early and then kind of came back in the afternoon. It's still holding trend, so that's your positive. But, you definitely had a good outside candle on volume. It's maybe starting a corrective move, but you have to watch on pattern here. If it starts to flag here, could be a bear flag. But again, right now, trend is still up. If this comes back in, you're looking at about 38,000, right? 38, 38.5. A convergence here with these trend lines. You also have the 50 moving average, not that far below. And that is trending up with price there. So we'll see what kind of pattern this puts in. The trend is still up though. And on the weekly, you can make a case if this bounces back up, it could just put in an inside hammer. So Bitcoin hanging in there just fine. And I don't really see any problems right now, but you definitely had an outside candle. So a little bit of technical damage there. All right, so market's closing in about 20 seconds here. So again, right up at the highs of the day. So markets are acting well. Look at Apple, they're getting a bid. Again, tomorrow, we'll see what we get here. I can't tell you which way it's going to go. I can tell you that right now, the seasonal flows are positive. Don't fight them until the bears come in and tell you to fight it. That said, I think that the market's kind of getting greedy right now, especially rallying as hard as it is right in front of the Federal Reserve meeting. And don't forget as well, we have a quarterly OPEX too. If they're getting enough people to chase calls Monday, Tuesday, you can get a reversal Wednesday, and who knows, maybe we pin right back to 4,600 on Friday. That is certainly a possibility as well. Anyways, guys, going to wrap it up here. You guys take care. Come find me on CarnivoreTrades.com. Talk to you guys all tomorrow.